Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about 5 effects of the interest rate hike we expect tomorrow, the stocks to buy or sell from the pandemic being over, and Ethereum's 15% drop since the merge. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The Federal Reserve will likely raise interest rates by 75 basis points or more tomorrow. What does that mean for individual households?
Yeah, you bet. And good morning, Allison. And all we talk about seemingly is interest rates and the Federal Reserve, right? And I try not to talk about it every day because I don't want to bore people. But it is a little different angle talking about today is like, how does it affect like you sitting at home? Obviously, we know how it affects the stock market. But yeah, what are things in your own personal life that are changing, slightly, but in aggregate, it's a pretty big change over the course of 2022. And we'll get to that in just a second. Here's where the futures are. Again, yesterday was kind of a surprise in the fact that it was red earlier. Then we ended up in the green, largely kind of in the green going into the close. So I did some small maneuvering yesterday in some accounts, but really it's a wait and see until tomorrow again at 1 p.m. Eastern when they make the rate hike announcement. So we'll see. This is what I expected yesterday. But didn't get it today. I think it will hold though. Okay, so here's an article on CNBC. This is really a really good one. How it affects you, right? Because ultimately, at the end of the day, we all trying to optimize our own situation, and don't want to make life about you, but you do need to take care of you. So, how are things changing in your life based off of all of the stuff that is going on at the higher levels? Okay, we're expecting a 75 percentage basis points, which is 0.75 percentage points tomorrow to combat inflation. You already know that inflation is eating into your purchasing power, right? But how are the interest rates affecting you? First of all, credit cards. I love credit cards. I think they are a useful tool. I kind of equate that, some people are like, don't use credit cards, they're bad. It's like, well, it's kind of like fire, right? I mean, you can get in a lot of trouble with fire if you misuse it, but you also have it on in your home like every day. Like there's a pilot light on fire in your hot water heater right now. We cook with fire, I mean, it's like, it's if you know how to use it, it's enhances your life. Same thing with a credit card. I like charging everything and then paying later, even though I could pay cash if I wanted to, or Venmo everybody. I like it from the accounting perspective. Again, everything's right there. If you need to question a charge, there's a procedure to do that. So I like it because it makes my life easier. So therefore I use it. However, if you carry a balance, the annual percentage rates are currently near 18%. Honestly, don't even look. I don't know what the rates are on my cards because I don't care because I don't carry a balance. Now I'm, blessed the fact that I'm able to do that. I know a lot of people aren't, but if you aren't able to pay off the balance every month, look at your interest rates. Those are going up, so you're paying more for the privilege. All right, mortgages are the biggie. If you're looking to sell your house, you might want to get on that because homes are becoming more expensive just because of the interest rate. So say you live in pick a number, $400,000 home. When when mortgage rates are at 3%, your home's a lot more affordable than when they're at 6.5%, which is they're knocking on the door of 6.5 right now. So it's, nothing changed with your house, nothing changed with you, except for there's just going to be less buyers out there. People aren't going to be showing up with all cash purchases like they were literally 6 months ago. So, and if you're looking to buy a home, if you can wait at all, I would wait. Just based on interest rates going up and mortgage rates going up, you're going to get the same home for cheaper if you can just wait it out a little bit. Not everybody has that opportunity, but if you do, consider. All right, auto loans. Yeah, we're used to the teaser rates. You can still get those. If you're buying a new car, they'll give you the 0.9% or 1.9, whatever it is that they want to. Depends on how bad they want to move that car. With the used car market's insane, right? People are selling cars for more than they bought them for a couple of years ago. No, Allie, we haven't sold your car while you're gone. But people could, right? And if you're buying a new car, they might incentivize you. But if you're not getting a new car and you're or they're not having to incentivize it, you may be looking at 6% or so is up in here, where instead of we're normally at 5%. sort of thing. Now you could be up at 6%, which could make a difference for those car payments if you're in a situation where you have one. Student loans are on the way up. Now we know there was relief out there, but that may or may not affect you if you're currently a student, like somebody I'm talking to. But last year, 2.75% in through the pandemic 2021, and then 3.73 last year, now up to almost 5% on those loans. So again, you've heard about how student loans can really be an anchor that weighs you down. Now you're going to owe up to 5% on your money. So just consider out there that it's another place where it's going to hit you. Well, those are 4 negatives. The good one is what saving rates are going up. Realize the banks don't have to offer rates, increasing as much as the interest rates are going up. However, there are, you might get a high yield savings north of 2% now, which we haven't had that in forever. If you're willing to go into CDs, they're north of 4% now. If you go through a brokerage, you can get higher rates, but again, they do move a little bit versus going to your bank where you're going to get a lower rate. But then again, that thing just sits there. So consider that's how 5 ways that the interest rate hikes are affecting you and your own household economy.
Next, President Biden has declared that the pandemic is over. What stocks are on the move based on this announcement?
Well, I thought it was funny. It seems going into the elections that the president is becoming more vocal on pronouncing things to be fact. And of course, the previous president, he announced everything was fact, like every day, like right. So it's kind of interesting from that 60 Minutes interview from Sunday night. But either way, pandemic has been declared over, so therefore it's over, right? Because that's how things work. 2 things happened yesterday that you can see at the top of this article here. BioNTech and Moderna, again, vaccine makers, those are obviously going to be down. You shouldn't still be in those. Really, they were crazy there for a while. And then they've been selling off for over a year. So the only reason to stay in BioNTech or Moderna is if you think there's going to be another wave, or monkeypox is going to take off and be a pandemic, which it may. Nobody's got a crystal ball. Or you think that we're not done with the the COVID thing and then it's on its way back. If you think that, you're going to get a pretty cheap price on these. But so those are the kind of stocks to sell, if you will, if you're still holding on to them. For the healthcare stuff. Stocks to buy, what's up is cruise lines and airlines were up. Now, I'm not a proponent of investing in that space whatsoever. We'll talk airlines specifically. They have their own challenges. They're basically a utility for the country. That's why they keep getting bailed out. And I know people get mad about the whole airline industry, but it's a tremendously difficult problem. And they are solving, they're making that possible for us to be able to travel around, not only for business, but for pleasure too, to be able to get around. So if the airlines were in a perfect world and they didn't have the backstop, if the government didn't have their back, we would pay double or triple what we do for tickets. So you may be mad that, hey, the government keeps bailing out the airlines, but it's also keeping ticket prices reasonable, right? So, do I think we should roll in and buy some American Airlines? No, I never think that. It's just they're at the whim of too many things, weather, power, strikes, all of that stuff is just bad for the airlines. And we're going into recession, supposedly. And again, in that case, people would travel less. If that's the case, we wouldn't have the problem in the airport. So when people say, are we in a recession? It's like, I don't know, we have full employment. People are traveling a lot. So those are not really recession type signals. But if you don't believe me, then you can hop into and get airlines and cruise liners or other entertainment type energies or type stocks on the cheap based on this announcement that the pandemic is over.
Last, cryptocurrency Ethereum has been hit hard since the highly anticipated merge recently. Is Ethereum a buy, sell, or hold?
All right, Ethereum Merge. I almost did a piece on this last week, but then again, I was out of my client crew and followers. There's just not a whole lot of people that are interested in Ethereum right now. Now, if you believe and you have it, then good for you. I'm not trying to tell you it's a bad investment. I'm not passing judgment whatsoever. If you believe in crypto, own some crypto. period. However, I did leave the both Bitcoin and Ethereum space several months ago based on the challenges of that we're having with the interest rate hikes. It's just a risk. It's a risky asset. So therefore, if you remember back in January, February, the bear market strategy, get rid of the highly speculative stuff, focus on the core holdings, and then grit your teeth because they're going to go down. Right. So, and we've seen that largely across the board. So I was out of Bitcoin, out of Ethereum, but there was a highly anticipated move in Ethereum. It's called the Merge. You can Google that and read volumes on exactly what that means. I will not try to even say that I know what it means, but it's a big move, and everybody, certainly proponents of Ethereum, I should say, expected that the move after the merge would be a lot higher, and it's not. It's down 15%, and that's since like a week ago or so. And then it got hit yesterday as well. So let's just pull up the chart again. If you don't want to own it outright through a crypto coin wallet or anything like that, you can buy the Grayscale Trust. Again, not saying you should do that, but if I do that, this is how I would do it. Sound like the old O.J. Simpson book. If I did it, here's how I did it, sort of thing. But you can look at Ethereum being up here, at least for the trust, up here at 44. It's down at 10. So that's a 75% loss in the space since the highs in November. So if you're, the Twitter memes are kind of priceless. I spend more and more time on Twitter now, looking for quick updates on things, which it's perfect for. But when you'll see these memes like, stock market got crushed, so I put my life savings into crypto so I could lose 4 times as much. Stock market's down 20%, no doubt about it. It sucks. I got it. I do it for a living, helping others. So I get that. But if you are let's bail on the market and go into crypto, you've been hammered, right? And wounded. I'm not laughing off a 20% drop, but most people I work with are not wounded from the experience. They're just upset and a little concerned about their future, that sort of thing. That's all very natural. If you drop 75%, you could be like wounded, like my life savings has been significantly affected. So whenever you see a chart like this, is it time to buy? Well, too speculative for most people, right? That's what I would say. So, if you believe in it and you think it's the future, do it. If you don't believe in it, then I wouldn't trade it. I wouldn't get involved necessarily. If you just can't, if there's a fear of missing out, put $5,000 or something, 10 grand, whatever a small chunk is of your investment into it, but then you just got to hold it, right? And expect that it actually could go to zero. And you heard the Treasury Secretary, Janet Yellen, talk about the U.S. going to a digital dollar in the future. I kind of chuckle. It seems like it's digital anyway, because, right, most people transact electronically now. It's like actual dollar bills. So it's just going the way of the dinosaur, right? Part of that was pandemic driven, but now we realize, well, when I'm in a snack bar at a high school and we're paying by Venmo, man, that's easy. That's just easy. So anyhow, my take on Ethereum, if you believe, own some of it. If you don't, I would not touch it from here.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.